This is Business Incorporated on Channels Television, and we're glad to have you. I am Bisi Adebayo. On today's show, the African Export-Import Bank opens up its shareholding to the investing public via issuance of depository receipts. And Old Mutual PLC declares £531 million in first-half profit. Plus, South Africans await Moody's latest ratings review, hoping for an escape of a further slide to junk status. Let's look at the markets, beginning from here in Africa, where the indices are mixed at intraday. The Nigerian All-Share Index is trending higher at 38,190.1. The South African Burst is 1.27% lower at intraday. The Egyptian index is also down 0.87% after data showed a fresh rise in inflation to above 30%. The markets in Kenya are still trending upwards, with the index closing 1.37% on Thursday. And Gulf stock indexes ended the week sideways on Thursday, with Dubai's index ending up 0.1% as Shore Capital, which has been trending down for the past couple of weeks, rebounded to 2.5%. Abu Dhabi's index edged down 0.1% as Abu Dhabi National Energy dropped 2% after reporting a small profit in the 3 months to June, swinging from a year earlier loss. The Saudi Arabian index edged up 0.16%. For Saudi printing and packaging climbed 3% to 23.06 reals in its heaviest trade since May 2016, after rising on Wednesday above technical resistance on its December peak of 21.85 reals. Qatar's index dropped 0.6% because of weak banks. The biggest, Qatar National Bank, lost 0.7%. And European stocks are heading for their worst weekly loss in 9 months as the war of words between the U.S. and North Korea prompts investors to back away from assets perceived as risky. For the week, the index was on course to fall 2.7%, and that will mark the worst week since early November 2016, just before the U.S. presidential election. Well, Daniel Coop, my colleague from DW, is at the Frankfurt Stock Exchange to tell us more about how this is hitting the markets today. Many thanks for joining us, Daniel.
Yeah, hi there. I can tell you that investors here at the stock market are calling this week already as the worst trading week in 2017. We have this magical psychological mark of 12,000 points, and we are even under this 12,000 point mark at the moment when we are seeing that the tension between North Korea and the United States are rising. Just about an hour ago, Donald Trump sent again out one of his controversial tweets saying that the United States would be ready for a war against North Korea. And that was making investors nervous here at the stock market. Mostly shares of banks are down. It really seems that investors at the moment are looking for safer ways to invest their money. For example, gold is very high on demand also today. Also, traders who are investing their money in currency are investing their money right now, for example, in the Swiss francs or also in the Japanese currency. So yeah, we see this tension. It's still there, and it's going to be really interesting how all of this is going to continue throughout the next days and weeks.
What are the chief concerns of traders and investors in Germany at this time?
Well, there are different topics that people are discussing here today at the trade in Frankfurt. On the one hand, steel is a very big topic because the European Union is now again putting a sanction on China when they want to do a steel business with the European Union. 28.5% is the tax now when China wants to export steel to the European Union. That's going to make steel companies here in Germany and also in Europe very happy because they have complained for a long time that the surplus of steel production of China is way too high. China has announced in the past that they would be working on this. They announced that they would be closing more than 600 steel production plants in China, but still we are seeing this surplus. On the other hand, Snapchat is a very big topic. Can I ask you something, Lizzie? Are you on Snapchat?
No, I'm not.
You're not? Okay, well, I actually signed up last week. look, I was playing a little bit around. This is me, kind of the gangster here at the stock market. So Snapchat is waiting for users just like you right now, because their user numbers are not going up as much as they want. And they were coming out with fresh numbers yesterday, saying that just per day they have about 7 million active users, and that's what's not making investors happy at all. We saw shares of Snapchat dropping by more than 16%, even though when you look at the numbers, they're actually also not doing well enough. In the last quarter, the report of the deficit went up from 116 million euros to now 446 million euros, so that's quite a lot of loss. And of course Snapchat is having big competition with Facebook, also with Instagram, and the problem that they're having is that Snapchat is being copied in the last weeks and months by Instagram and also Facebook, and that's what's not making investors and shareholders happy at all.
Oh, Daniel, before I let you go, tell us what's up on the economic and earnings calendar next week.
Yeah, lots of numbers and earning reports are also going to come in next week. But I guess when we still have this North Korean and United States issues, those will be again overshadowed. But still, very interesting earning reports coming in next week. RWE, one of the biggest energy companies here in Germany, will provide fresh numbers of their last quarterly performing. Also, we'll get new reports of the gross domestic product here in Germany. Also, the European Union will give information about the latest inflation data. So lots of reports. I'm not going to be here next week. My colleague Ulrich Bartz will be here giving you all the latest. And yeah, now sending it back to you in Lagos. Happy weekend to you, and see you again very soon.
Thanks a lot, Daniel. It's been quite an interesting week. See you again some other time.